You've probably heard about turtle soup setups, but have you mastered them? Today, I'm going to show you why these entries can make the market algorithm love you. Imagine knowing exactly when liquidity flips in your favor, turning your trades green almost instantly. If you're serious about leveling up your trading, be sure to hit that subscribe button for the best educational trading content out there. And if you're ready to sharpen your skills and gain an edge, keep watching because I'm breaking everything down in this video for you today. Let's jump straight into it with the different types of turtle soup entries. With the turtle soup entries, we have to understand how turtle soup setups catch liquidity sweeps. We're going to be covering the classic turtle soup entry, the CISD entry, the high time frame fair value gap entry, and the rejection block model entry. Everything you need to know to master these entries is on screen. It's going to be starting with liquidity sweeps above and below old highs and lows, high probability order blocks, understanding your change in state of delivery, the fair value gap formation, understanding where your optimal trade entry is higher time frame, as well as understanding how S&T divergences affect us at key reversal areas. As always, we understand our high time frame to low time frame alignment with our narration driven market context, always looking for market maker buy or sell models, and we always put our stop loss at an invalidation level with time-based manipulation entries with key session times, and obviously understanding where our drawn liquidity is. If we sweep one end of the range, you have to understand why we're targeting the other end of the range. We have to understand the internal and external liquidity dynamics, as well as how we can use rejection blocks to confirm higher time frame draws, as well as using them to enter inside of. Of course, understanding displacement inside the range after a liquidity sweep, and of course, understanding our power of three. If you're a beginner and you don't quite understand all of these, don't get concerned. I have videos for all of these on the channel. Just feel free to look, and if you have questions on any of them, you will find a video for it. Continuing on with our classic turtle soup entry, our key characteristics are going to be a liquidity sweep of a prior high or low, and a rapid reversal or rejection of price, entering as price returns inside of the range. Of course, we understand what range we're delivering outside of, whether it's the Asian range during a London manipulation or continuing from a London manipulation into, like we said, a New York continuation. We always have our stop below the sweep high or low, targeting the opposing end of the liquidity. If, for an example, price taps into a previous day's high, sweeping that liquidity in reverses, where we would then enter above previous day high for a short, targeting most likely previous day low. This is how most people are able to top tick and bottom tick because we are entering inside of the PD array that is below the old low or above the old high, trusting it that price will hold there and reverse from that position at a key time, of course. How does that classic turtle soup entry look, you might ask? Here we have a high probability hourly order block following a turtle soup sequence into another order block. So we are expecting this order block to push price higher. Then we come to a lower time frame and see we have 15-minute internal liquidity here with these failure swings and low resistance lows into the order block, as well as fair value gaps pushing us higher. Why did we need to break this low here? It's because it was a data low, right? We were responding from an order block up here that pushed us lower, and then to take out this liquidity here to manipulate us lower, and me expecting a distribution higher from this order block to then take out these highs. It just took a little while, but that is indeed what happened, right? But that is how we anticipate and catch inside of these wicks and bottom tick these entries, anticipating the reversal inside of the hourly order block after sweeping the internal 15-minute liquidity. Next up, we have our CSID entry model, which is our change in state of delivery, forming after a key reversal from a liquidity sweep, with displacement confirming our institutional participation. Our entry is on the retrace into the order block formed after the CSID occurs post liquidity sweep, with our stop beyond the order block or beyond the liquidity sweep, targeting liquidity or an imbalance in the new trend direction. So after our reversal, we either target the opposing order block or the opposing external highs. Looking at the same piece of price action, taking out this internal liquidity into our fair value gap order block, we can see that within here, we form that CISD model. After us taking out the low, we then close above our previous down closure candle. We then come into the order block here and then deliver higher, creating relative equal highs. And then even coming onto a 5-minute time frame, we notice that we don't necessarily take out the previous candle high, but as you'll see here in a second, we come into a rejection block entry, which is supported by the 15-minute as well. We also notice here on the 5-minute, we have an SMT with a turtle soup taking out London's low and redelivering and displacing back inside of the range. If we note here on the 5-minute, we have an order block. We form 1, 2, 3 low resistance lows, accumulate, manipulate into the order block here after the SMT and displacing back inside the range, and then return to deliver higher. We can also see that we respect order flow and keep respecting order blocks. And then that comes into another sweep into a higher time frame order block after manipulating, or excuse me, after accumulating, manipulating, and then distributing. We see once again that we have a fair value gap here, so we can use the wick of the order block and we deliver into it and then deliver higher. With our model number 2, we come in with the high time frame fair value gap entry with a sweep of liquidity into the high time frame fair value gap followed by high time frame displacement. The high time frame fair value gap forms after our post sweep of liquidity, and you can either wait for a retrace into the fair value gap after an accumulation or try to enter within the fair value gap. We'll look at it a couple different ways because it's also most times delivering from a low time frame turtle soup or a higher time frame turtle soup where we then form true displacement. We always enter as price retraces into the high time frame fair value gap and usually forms a low time frame model 1. We will see what high time frame fair value gaps are valid to use as high time frame entries as a model 2 entry, and we will also look at which ones are invalid. We will target the opposing liquidity level, which is usually an external high, which is either resting, with another FEG above, or just depending on what the chart looks like. Obviously, it's the opposing end of liquidity. We don't usually shoot for really small RR trades because we expect to catch the bottom and hold until the into the reversal into the continuation. Here's how a high time frame fair value gap model should look like. We have accumulated, manipulated, and we can see after displacing back into the range, we reaccumulate. Specifically looking at this 1, 2, 3, 4 candle model from our overnight session in Asia into London into a 6 a.m. reversal. We come onto the hourly and we see we accumulate inside of the range here with our range starting Thursday here with this high inside of these lows as well. We notice that we have a London reversal. We come to a 15-minute. We see we deliver from this order block here and this fair value gap. We have 1, 2 low resistance highs, and we can see our market maker buy model into these highs. After we sweep into the high time frame fair value gap, we see it's around a key time into 8:30 into pre-market, and then we get our displacement with our order block. We see our fair value gap, so we can use the wick and we find an entry inside of there. And then as well, you could even Yeah, you could have technically, right, entered inside of here, right? But either way, we see our delivery, right, order block model 1 inside of the high time frame fair value gap. And we've actually had this same type of situation in NFP, but this 916, 910 was high of day, and we swept out the high. But there was a reason I anticipated it there rather than I would anticipate it here, and that's because of how quickly we displaced into the high, right? And it's an external liquidity into the FEG, not an order block where I would expect a 1-2 tap, right? This is a fair value gap, so I would expect us to retrace out and not need to sweep it again and then deliver very aggressively how we did into the lows, and then continue to take out the lows and then past to the equal lows in previous day high. Previous day low. Next, we come into our rejection block entry model. And for our rejection block entry model, price will tap a PD array after sweeping liquidity, like we talked about, usually an order block. It has a decisive rejection and forms with a strong candle pattern. What do I mean by a strong candle pattern? It's not that I don't want rejection blocks to look like doji candles in a sense, but I always trust my rejection blocks when the body and the wick are usually a 1-to-1 ratio. When the wick is too long, in a sense, I will usually see it get filled to and through. There are cases where this doesn't hold valid, but it is because I'm not a pattern trader. I have to understand the narrative, the when, the why, and the where. Our entry will be at the close of the rejection candle or a quick retrace into the rejection block, with our stop beyond the rejection block low, targeting the opposing liquidity zone or imbalance. Here we have that same piece of price action where I showed us delivering from the London order block. And we come in and we see the hourly wick inside of the body. Or not inside, but we see it to the size of the body. It is not super, super long in a sense, how this 4-hour candle wick is, where I thought this wick would get filled to and through. It is a lot different, right? We also liquidate the internal liquidity low and close back with inside the range, right? This hourly, and you can even say it in a 2-hour candle range. Side of here, liquidating the internal low into the order block, right? Protected low here, delivering order block, accumulating, manipulating, and then following our distribution as well. So we also notice on the 15-minute, like I said, I didn't like this 15-minute rejection block wick, but it is supported by the hourly and this 5-minute. So that's in a sense of where that's in a sense of where I will trust the 15-minute, the 5-minute, and the hourly to stack on top of each other. Just because this wick is a little bit longer than all the others stack and make sense, and as well as we deliver right to the rejection block low, taking out these candle bodies low and delivering higher. In a sense, you can almost see right these wick lows as an order block and price bouncing off the order block lows. Off the order block high and then delivering higher. This is how I usually like to take trades, because in a sense you'll get caught getting stopped out here just like I did if you anticipate these lows to get taken out when they don't necessarily need to. In a sense, also, I got stopped out here, like I said, because it was not at a good time-based rejection block trade for me to want to go ahead and keep holding this. Also delivering from this BPR FEG here, right? Internal, almost anticipating external, but still being in the trade and being break even because we have everything else stacking above with bullish order flow, right? Not anticipating these lows to get ran. Each turtle soup entry offers unique advantages for different market conditions, and whether it's a classic entry, your CISD, your high time frame fair value gap, or your rejection block, all are built on strong liquidity principles, and like we said, your need to knows There was a long list at the beginning of the video, and if you didn't read through all of it, you won't ever figure out how to actually turtle soup and trade correctly because you're skipping the work you need to put in. It does take a lot of work, but you'll be way better off than your IFVG traders or the pattern unicorn traders. Whatever they want to do, let them do it. But long term, taking the notes, doing what you need to do is how you're gonna find progress and find success in the long term. You need to integrate these into your strategy and watch how the market algorithm responds. We're going to hop into a couple more chart examples so there's no confusion left on the table. And if you've been enjoying the video up to this point, be sure to like and subscribe and leave a comment on your favorite part so far. Let's get into the charts and clear up some confusion. Here's almost a picture perfect turtle soup. We have a 6-10 accumulation range. Obviously, we take out the high. It's not into anything really significant. If we would have delivered from this fair value gap, we would have pushed down. So, understanding that London has closed back inside the range, we look on the hourly. We see we have CISD, and we do have London low here, as well as Asian low. We hop into the 15-minute, and we see we have low resistance to the high. Now, what would we do is we would wait for our 6 a.m. candle to open, and then wait for a manipulation time. 6 is opened, and we come into 7, still accumulating inside the range, so there's no trade. It looks like we had 8:30 news that day. The news quite hasn't taken out the lower end of the range with this obvious Asian liquidity. Coming into 8:45, I would like for it to take it at 9, and if it takes it at 9, then I would understand into 9:30 that price should spool higher and take out this, and then that 10 shouldn't reverse, it should continue delivering higher. 9:15, 9, we still haven't taken out this Asia low. So with our if-then thinking, we should get this accumulation, manipulation, and then a quick distribution. Hop down to a lower time frame. We see we have our low resistance to the lows. We've displaced with news. We have our data high that we haven't swept. We open, sweep the low, close back with inside the range. And from here at this point, if we don't continue to take out the high, I could see a retracement into an OTE of this candle and see that we will continue to deliver higher. No real close, and we check on the 15-minute. No real close as well. No real CISD, no real order block. No real, I mean, if we were in on our high time frame fair value gap model, obviously our fair value gap is hold, but if you're trying to find a very, very precise entry, like we said, we didn't get any type of, OT entry and then rejection, close past the high. We will most likely start to get it into this 10 open, most likely protecting our 950 low. Here's that time where I would see that wick in the 15-minute. And, well, I wish we wouldn't have seen it, but that OT entry, like we just talked about, our rejection, and then our close above. Let's see if we would get an order block re-entry before taking out the high, or if the high time frame fair value gap / 15-minute rejection block entry is all you would have get. You see how you can stack all of these models and put them into trust yourself, and also when you could find that your entry hasn't quite been confirmed within here. See, we take out the high, and that's not like, oh, we haven't quite missed the move. I would still anticipate our rejection here, like we talked about, protected lows, and then a redelivery higher. We get our redelivery higher there. soup again, which we might have, most likely gotten break even here, and then into a time where I wouldn't have wanted to trade, right? We would have most likely been one and done here or here, because one, obviously we wouldn't have went break even entering off the order block wick here, but our low never got broken. We also rejected and closed. So there, if we would have put this on, a long position, we would have entered somewhere inside the wick. Let's say, EQ of the wick, or we'll just even put it at the high, just so it's not a hindsight warrior thing. And, stop below the low, put the 15-minute on there as well. Put EQ of the order block and the Asian low. So put it right around there. With our stop below the Asian low's liquidity, as well as EQ of the order block, and then right targeting that high. It would have been a 2RR, and if we zoomed in even lower time frame, right, we would have got a better entry. But even past these lows, right, entering, and we get our valid CISD, so we could enter here, and then like we talked about here with that valid entry, right, below that order block, right, as well as on a 15-minute, valid order block entry, as well as, understanding that we should continue to distribute, right, and we just have our New York OTE, and not a classic New York OTE, but it's not even really a daily profile, right, we just see, we have this protected low here, and we have a high that we, don't anticipate to be the high a day. Oop, wrong way. We fib out our high to low and see our range. We see our OTE range. We have got our stop, and our true stop would be invalidated there, but anticipating this market maker here, buy model as well here, and then no rejection of OTE. We should then deliver higher, respect the order block, and put our take profit above the opposing liquidity, past it. This would be a 4, a 3, but I'm sure we could even get a 3 if we, looked at the 15-minute, maybe fibbed out a breaker, or even looked left and seen, maybe this high here. Even into, EQ of, right, the fair value gap above. And you can even, if you don't want to be greedy, you can even do the first 25% quadrant of it. We tapped it here, so we won't get greedy. We'll just do the EQ of the fair value gap. Oop, don't want to go to... Let me go back real quick. It doesn't have the 1-minute data this far back, so it pulled me back, but we'll see on the 5-minute, right, we respect it. And then we continue to deliver to our take profit. Finding an entry within there, you're getting stopped, break even, after not delivering past our protected low, internal to external, we should be break even here. We get stop break even, and we see again, on the 15-minute, right, there's no real invalidation to this low here. It is protected. We should deliver from the 15-minute order block, even if we re-deliver from it. We check on the 30-minute as well, right, protected order block, and then as well into a protected rejection block. The rejection block looks a lot better on the 4-hour, and you can see we almost perfectly deliver to EQ of the wick. This is why I say this one's almost picture perfect, because you can stack almost all 3 of your models, your high time frame fair value gap, your classic turtle soup entry here, if you, trusted enough to enter here. I was trying to show the CISD model, so I wasn't just going to enter in here with, people maybe not understanding why you should enter in here, and also maybe getting called a hindsight warrior, so we let it play out. Find a high probability entry here, even into here, and then let it run out to our draw on liquidity, understanding that this draw higher is what's needed after accumulating, manipulating, following with the distribution. Balancing this price range here with an OTE delivery, and then continuing to deliver higher.